Oh boy, could the great housing and stock market reset be upon us? In this video, we're going to discuss a problem that unfortunately might not be realized. And if we come to realize it, could be really bad for stocks and real estate. Before I talk about the problem, which we'll get to in about 30 seconds, it's worth noting what's going on in the world. Fear. Fear gauge is back over 20. We've had the worst October in the stock market in 5 years. Real estate in the last 45 days has hit a wall. We are studying the market on a daily basis with my real estate startup, and we see the impact into the wall. It's worsening by the day. Allocations are getting cut to stocks just like they were getting cut in the 2022 bear market. Back to October of 22 levels. That's where we're getting cut back to. That was the bottom of our stock market over the last few years, with the exception of COVID, obviously, was October of 22. We're now cutting stock allocations at companies on Wall Street per Bloomberg, Goldman Sachs, and otherwise to October of 2022 allocation levels. Some of the steepest losses have been seen in the NASDAQ in the last 5 years. And look, everybody has their turn to be right. It's really easy to make fun of the bulls when they had their turn and then stocks correct. It's easy to make fun of crypto when they had their turn to be, go to 69K and then correct. It's easy to make fun of bears when, they have their turn now and then eventually they won't have their turn again. Everybody goes through their cycle. I really believe that. But something that's critically painful now is that Goldman Sachs believes the Federal Reserve won't be done keeping their boot on the necks of the economy until jobs print negative. That is, until the economy actually starts firing people. People actually start losing their jobs. That's when the Federal Reserve might finally be done, because that's when their narrative of maximum employment starts getting hurt. And that's the first time they have to start evaluating, well, if right now we have maximum employment, then we just need to fight inflation. But as soon as that maximum employment gets threatened, then is the first time they can critically ask themselves, okay, have we done enough? And until the jobs print goes negative, we might be suffering with boot. So why is that? What is this thesis that contributes potentially to a longer-term Great Reset? Well, it has to do with cash. And I want to start about thinking about this cash idea from the real estate point of view. And then you're going to see how it relates to stocks, but nobody's made this connection as far as I'm aware. It's something that through the research and studying and reading that we do, we're like, oh, wow. First, real estate prices year over year in many markets are down 0 to 10%. That's not actually that horrible when you consider that mortgage rates are now over 8% and they were under 3%. That's an over 500 basis point move in mortgage rates, which should reduce buyer purchasing power by 50%. Yet prices in some markets like Florida are slightly positive year over year. The national average is down maybe about 5%, and some other markets are maybe down 10 to 15%, especially the COVID markets where we're seeing kind of a COVID reversal. It's kind of like the markets that boomed, the Boise's and the Austins, they're having a little bit of an unwinding. And the markets that people were fleeing are maybe a little bit more stable, at least when it comes to California. And Florida is this unique exception where despite homeowners insurance rates that are so unaffordable, people don't even want to have homeowners insurance anymore. People are still flocking to Florida. But what's the cash thesis? The cash thesis is that people had so much extra wealth built up during the pandemic, so much in excess savings, that they are actually able to insulate the loss of their 50% purchasing power by accepting a higher level of payments as a percentage of what they otherwise would have been used to. So, in other words, if you're like, hey, you can afford a $500 a month car payment and you're used to a $500 a month car payment, and then all of a sudden somebody gives you $50,000 in stimmy money, let's just say, I'm being extreme here, okay, to make the point. And then somebody's like, you want that new car? Well, now the payment's going to be $1,000. You're like, dude, I got an extra 50, man. Like, what's another 6 a year? Like, no problem. I have the car paid off before I'm out of my 50. The same, to obviously a different extreme, could be what's happened in the housing market, where you actually had so much propping up of excess money that what did you end up getting left with? You ended up getting left with people who had such a larger amount of coffers that they're like, no problem. I'll take the higher interest rate because I want that house. I want that property. I want to live in that, and I will refinance it when rates are lower. I've got to have it now because I can afford it now. I don't know if I'll be able to always afford it in the future, but I want it now because the pandemic taught us that life is short. Unfortunately, that attitude is exactly what Jerome Powell has to squeeze out of us. It's a little graphic, but it's kind of like getting waterboarded, okay? Like, you get waterboarded in torture, okay? It's like you're getting thrown down on the table, and Jerome Powell's doing this, and, you know, they're dumping buckets of water on us. If you get up and go, that all you got? I'll still buy that house. I'm gonna still buy the dip on stocks. You can be like, all right. And then you get again. How about now? I'm still feeling good. How about now? And it's literally the economy getting waterboarded. The economy is getting tortured. The economy is just still so resilient and strong. It's not until you actually start choking near death, which will be measured by job loss, the Fed might U-turn. And that's why, and it's so interesting because everybody always wants to be right. Everybody knows people do their best, and people are right, people are wrong. I've been right many times, but I've also made some oopsie doopsies. Not to mention any names and face. Oopsie doopsies. There's still hope. But anyway, take a look at this. T.S. Lombard was a longtime bear. Okay, they've been a bear throughout 2022, and that's why they got a lot of popularity. Like Mike Wilson and Morgan Stanley, bear throughout 2022. What happened in the summer of 2023 when the stock market was going straight up for months in a row? They actually flipped. Morgan Stanley's like, you know what? Or Mike Wilson's like, I was wrong. Now, and they flip. They're like, you know what? It's time to go bullish. You've got T.S. Lombard that's like, you know what? We're increasing our allocation to equities because we have to, because, you know, we don't want to get left behind. Or T.S. Lombard here said that. Those are things we covered this summer. The bears felt they were so wrong that even the bears capitulated. And you know what? That was the sign of the top, folks. Hindsight is 2020, and I missed it. When the bears started capitulating, that was our warning sign. That was our red flag. When Mike Wilson and T.S. Lombard, your resident bears, get up and say, we can't handle it anymore. This economy's too strong. And they stop torturing the economy, as bears do, then all of a sudden, that's when you know you've hit a peak. And guess what? J-Pow, the torturer, he just keeps going. But you know what? There is a risk that he's not, I'm looking at the wrong camera. There is you got my side shot. There is a risk that J-Pow is going to just keep going until our GDP approaches under 2%, which T.S. Lombard actually believes it could happen in Q4. They think that earnings recession will drive us into a deterioration below 2%, that Q3 was an anomaly, but Q4, Q1 will drive us below 2%. In fact, they expect real GDP, which is how we measure GDP, inflation adjusted, to be 1.5% in Q4, which will still make our annual GDP rates more over 2%. But the point is we'll be squeezed down to finally below trend. Is that finally what's going to lead to joblessness and then the Fed U-turning? Possibly. But it's not just T.S. Lombard. It's even folks like Goldman Sachs who are saying we need to see the joblessness. We need to see the torturees flinch. And the reason the market's done so well is because people have had this excess cash to buy the home and to buy the dip in stocks. The problem with that is you don't convince the Fed that they've done enough. So what happens when people are finally out of cash? And this is where it gets interesting. Think about this. What happens when people finally say, I'm done? In the real estate market, you know what that looks like? That looks like every seller and their mom right now saying, we are going to put our homes on the market in spring. And then what if the buyers then don't have cash? And all of a sudden you see Yes, low inventory, but low buyers now, creating some balance. But now buyers have dropped even lower, so you're seeing real estate hitting a temporary wall. But then what happens when real estate inventory starts doing this? That's what we're watching closely with my real estate startup. Deadline to invest in that for 2023 here is November 1st. Go to househack.com to learn more. Somebody, by the way, in our last HouseHack video absolutely nailed it. It's a first commenter that I've seen that probably summarized what we're trying to do with that company so succinctly, and they saw the vision so well. The mini funds part of your company is fascinating me the most. It's over here on this more niche video, our first renovation, my real estate startup. We have multiple renovations going, but the mini funds part of your company is fascinating me the most. It seems you may be selling the real estate to institutions, investors as a property-backed security that then has instant positive equity since you bought them at a discount. Still going through the offering circular, but if you pull this off, this is crazy stuff, man. No guarantees in the startup world. Anyway, what happens in the spring when finally the money is out? That's the fear that exists now. So what does that mean? Does that mean paper hand right now on all the stocks you have? Stocks can often amplify the fear beforehand. So it's possible that you paper hand now, you've already hit your second bottom. There's no guarantee of that though. With real estate though, 110% patience. That's what HouseHack is doing. Strategic deals where people are begging us to buy the properties right now. No liquidity. We literally have people with like hoarder homes and moldy homes or situations that they can't get out of where they're like, please, we need the cash tomorrow. Like, as I'm starting to see that, where sellers are like, Kevin, please, can you give us I'm literally getting sellers go, Kevin, can you give us a non-refundable deposit, please? That's the fear. You discount that to insulate yourself. Anyway, if you want to learn more about the strategies that I employ to build wealth and how to deal with this sort of psychology of money, make sure to check out my courses at meetkevin.com. They're less than $100 each. We've got a lot of them coming out within the next few weeks, and we're really excited to pre-sell them. They'll all be worth double. Check out my housing startup at househack.com. Or just go to meetkevin.com. You'll see all the little things at the top, including financial advice. And folks, I'll see you in the next video. Just do keep in mind, even though I'm a licensed financial advisor wearing a Christmas sweater right before Halloween, I'm a licensed real estate broker, and I'm becoming a stockbroker. Yeah, stockbroker too. This video is neither personalized financial advice nor real estate advice for you. It's generalized perspective, and that should make sense, right? I don't know your personal situation. I can't give you tax or legal advice, and any third-party content I show, like these research reports, I can't endorse them. I can't tell you that these are 100% correct. I'm just showing you and commenting on what other people are saying. And so remember that this video is not reasonably sufficient information for you to make an investment or to evaluate a security. Any products I promote could be affiliated, probably are. And the goal, obviously, of providing value is to not only make sure that my family has the ability to survive, but also that we can be here to keep providing value. We just had little twin babies, and we're bringing them home very shortly. I can't wait to share them with you on video. Thanks so much for watching. We'll see you soon. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.